Hey everyone, today I want to talk about the importance of market timing, the unexpected twist of Dubai's daylight savings, and the staggering growth of money market funds. So, grab a coffee, sit back, and let's dive into the world of finance. I'm sure many of you have experienced the frustration of daylight savings time. It can mess up your schedule, and sometimes it even affects the financial markets. I recently found myself in such a situation here in Dubai. I thought the markets would close an hour earlier due to daylight savings, but it turns out they're closing an hour later. It's left me recording market close videos at 1 a.m. local time. Not an ideal situation, but let's roll with it. Now, onto a more exciting topic. It's my 27th birthday today, November 7th. So, thank you in advance for all the birthday wishes and support. Now, let's dive into the meat of today's discussion, money market funds. Money market funds are hitting a new record high, approaching $6 trillion. That's a staggering number, and it's currently trading at 4.5 times the median average of over 70+ years. This surge is primarily due to the higher interest rates offered by these funds. Investors are flocking to money market funds because of their liquidity and the attractive rates they offer. So, what can we expect in the coming quarters as yields start to decline? Well, let me break it down for you. When Treasury yields start to decrease, investors may flock back to Treasuries to lock in those high rates. After that, once Treasuries drop below the 3% threshold, things get interesting. You see, when Treasury yields fall below 3%, real adjusted for inflation rates become negative. This is significant because it makes stocks more attractive compared to bonds. When equities become more attractive, investors are incentivized to invest in the stock market. This shift in investor sentiment could lead to a surge in equity markets. It's all about that magical 3% threshold for Treasury yields. Now, let's take a look at the current state of the markets. Treasury yields are on the rise, with 10-year Treasuries at 4.6%, and the crucial level to watch is 4.79% to 4.8%. If we break above that level, it could put us back on the path of a downtrend. In other market news, it appears that the stock market correction is over, with all 11 sectors in the S&P 500 seeing gains. The best performing sector was real estate, followed by financials and consumer discretionary. There was a lot of broad-based participation across the market. Now, let's shift our focus to individual stocks. We have Eli Lilly making waves in the biotech sector with an optimistic outlook on a major Alzheimer's breakthrough. This news sent Eli Lilly's stock surging. Additionally, we've seen other biotech stocks, like Novo Nordisk and Vertex Pharmaceuticals, making gains. Moving to tech giants, we've got Apple, Amazon, Tesla, Nvidia, Microsoft, and Meta Platforms, formerly known as Facebook, in the spotlight. Apple is hovering around its resistance at $180 per share, while Amazon is looking to break through $146. Tesla is consolidating sideways, and its support level remains at around $215. Nvidia is approaching its resistance at $475, and Microsoft is making strong gains, aiming for its all-time highs at $366. Meta Platforms is trading within a range, with a resistance zone from $315 to $325. Netflix is also nearing resistance at $452, while Google is on the verge of filling a gap, hovering around $139 to $144. Meanwhile, Visa is approaching resistance at $250, and PayPal is struggling to break through $57. Costco and Enphase Energy are consolidating, not showing much price action. To summarize, the market is at a critical juncture, with the S&P and Nasdaq testing their lower highs. Whether we break through this resistance and establish a higher high, or continue trading within the downtrending channel, is the big question. So, what do you think about the current market situation? Leave a comment below and let me know your thoughts. In conclusion, timing in the financial markets can be crucial, and it's essential to adapt to unexpected situations like daylight savings. Money market funds are currently booming, driven by attractive yields. As Treasury yields decline, it could lead to a shift in investor sentiment, making equities more appealing. The stock market has shown signs of recovery, with all sectors in the S&P 500 seeing gains. Biotech stocks have been in the spotlight due to promising developments in Alzheimer's research. Tech giants like Apple, Amazon, Tesla, Nvidia, Microsoft, and Meta platforms are facing critical resistance levels. The market is at a crossroads, and the next move will be pivotal. Make sure to stay updated and adapt your strategies accordingly. And that's a wrap for today's market update. Disclaimer: this content is for informational purposes only and should not be considered financial advice. Investing involves risks, and you should do your research and consult with a financial advisor before making investment decisions.